changes are coming to the groups of people who qualify for Social Security. The Social Security Fairness Act opens the benefits door to groups who may not have been eligible before. So Terry Wheeler, before we get into the changes that may be coming our way, give us a primer on Social Security. What is it exactly?
Sure. So Social Security has a long history, and we often kind of joke, is this an entitlement or a right? Social Security is something we all pay into. We pay into it and our employer pays into it. So it doesn't feel so much like an entitlement to us, but the government does consider it an entitlement. Is there any merit to that? Well, if you look at Social Security when it was formed, people only lived for about 5 years after getting Social Security. Now people might be putting into Social Security for 10, 15, 20, 30 years, but they'll be taking out for sometimes 20, 30 years. So one of my colleagues here, his grandmother just turned 105. So she started taking it early at 62. That's a lot of years of Social Security. So
wow. Bless her, though.
Yeah. So I think it's a little bit of a hybrid. I think most of us do consider it a right, but it could have a little entitlement component, because if you live a long life, you could actually take out a lot more than you really put in. But for the most part, Social Security is there for you for the long term. It's unfortunately one of the main sources of retirement for a lot of Americans. Pensions have somewhat gone away, so we need to plan well to either create private pensions or other sources of income. But Social Security gives everybody a level of safety that you cannot outlive. It does increase by inflation. So the focus in planning is, how do we optimize this for each and every individual? And that is something that involves life expectancy, involves income and projected tax levels. But that's an analysis that we do for each client that is very important. But for today, we're going to talk about what's changing in 2025. And we do have prior podcasts that you can listen to that go into the details of optimization.
All right. So these rules are supposed to change this year, 2025?
Yes. So we have a series of rules that change in 2025. And then the new act that affects some people actually goes into effect retroactively. So it affects 2024, and you'll be paid back money if you were underpaid.
All right, then. Who's eligible?
Okay, so let's go over the broad changes that affect everybody on Social Security. So one of them that everybody is always looking at is, what is our cost of living adjustment for 2025? What kind of raise are we going to get? Because Social Security does give you raises based on inflation. Now, let me ask you this, Patrice. Does it feel like we're living in an environment of inflation, or what's your feeling over the past few years?
Well, the past few years, it's been up and down. But, right now you go to the supermarket and you look at the prices and there's inflation.
Yeah, inflation and shrinkflation.
Yes, that's true.
Yeah, so you're paying more and you're getting smaller packages. This year, inflation has normalized a bit. So inflation is down, which what that means is the rate that it's growing for the past year is down from the prior years. So you have a 2.5% inflation adjustment that's coming. Now that compares to 2024 was 3.2%. And 2023 was a whopping 8.7%. So over the last 3 years, we've definitely experienced quite a bit of inflation. And most of those numbers, I think the common feeling is that they're understated. I mean, we're feeling a lot more effects of inflation than that, but that does help our paychecks go up. So everybody will be getting a small raise here in 2025. Now, another change that has occurred is full retirement age. So full retirement age keeps getting pushed out further and further. Now, full retirement age has just increased a little bit this year, but it's increased by 2 months. So if you are hitting Social Security full retirement age this year, that is 66 years and 10 months instead of 66 years and 8 months. So minor change there, but 2 months of retirement
can make a big difference.
It affects you.
Yeah.
And then if you're a worker and you're paying into Social Security, you have to pay more into Social Security this year because that ratchets up also. So the previous limit for Social Security was $168,600 in 2024. Now you'll be paying those taxes on $176,100. So minor increase, kind of reflects inflation, but you are paying about 6.2% in. So you're going to pay 6.2% on an extra $8,000 or so. And then your employer has to pay that same amount. So they are paying more in. So costs for businesses are going up, which does affect inflation because they pass it on.
Absolutely.
So Social Security reduction, if you're working before retirement age, full retirement age, then when you earn money over a certain amount, they reduce your Social Security by $1 for every $2 that you earn. So we refer to this as a penalty tax. Now, technically, they're just delaying your benefits. So if you're doing this and you're getting penalized, you will get it back later, but on a monthly basis slowly, because your benefits go up if you are working during this time. So this is really if you retire and take your Social Security benefits at 62 and then decide to work, you're paying a penalty if you earn. In 2024, it was $22,320 is all you could earn. Then you pay that $1 penalty for every $2 earned above that. In 2025, this goes up to $23,400. So minor increase, but the key is once you hit full retirement age, the general rule people think of is once I hit full retirement age, this goes away, which is sort of true, but not in the year that you turn and reach full retirement age. The year you reach full retirement age. Yeah. And they got to complicate everything. So the year you reach full retirement age, it's $1 in penalty for every $3. And it's over a higher amount, which has gone up to $62,160. So it's up a few $1,000s. Now that's only the year that you hit it. Then the subsequent years, there is no limit. You can earn $10 million and you get your full Social Security.
Okay, but that all depends on your full retirement age. And as you say, that changes.
Yeah. So for each of us, it's a little different. So for people that are going to be applying this year, it's 66 in 10 months. And then next year, it's actually going to go to 67. And that's where it is until they change it again. So depending on the year you were born, that's going to change your full retirement age. All right. Now, the big change is the new law. So the new law is called the Social Security Fairness Act. Now, you can tell the authors of this believe that it should be passed because of the title. But this is an area that if it affects you, you know it. Now, this is going to affect people like teachers, some government employees, retired firefighters, depending upon their benefits package, police officers. So it's a law that is trying to get rid of what was called WEP, which is a windfall provision or windfall elimination provision, which basically is saying, look, if you're getting these very nice pensions, typically from the government or from teaching as an example, then we are going to reduce your Social Security because that benefit those that believe in the windfall say that it's giving you more than you put in anyway, and so is the pension. So we're going to reduce one, which is Social Security.
Well, let's go back a step here. You say teachers, firefighters, these people were getting a pension from what? From a state government, not the federal government?
Yeah, from the state government. There are like postal workers, so there are some federal programs that this would affect also. So they're getting a pension already. And then the thought is they shouldn't get a full Social Security on top of that.
Why? Because they didn't pay into Social Security?
Well, that's why they call it the Fairness Act. They did pay into Social Security. So you're a teacher. You taught for 20 years. You qualify for a pension. But you also worked maybe in a job that you were paying into Social Security. So as a teacher, you may not be paying into Social Security. You're paying into a different program. Mm-hmm. But maybe you worked. Like I started working when I was 15. Maybe you've got your 10 years in because you need 40 credits. You can get 4 credits a year. So that's 10 years of work. You might have worked 15, 20 years paying your hard-earned dollars into Social Security. So who are they to take it away? So this new act is basically taking that position saying, look, you earned it. You should get it. So the windfall provision, and then something called the government pension offset, or GPO, which this affects more the government employees, these are both eliminated with this new 2025 law. So if you are affected by it, one, you do know it. So trust me, my clients that come in, they are very aware that they're getting penalized and they're not happy about it. Probably rightfully so. They paid into this. They earned it. So now this windfall elimination is gone, and they will now get all their Social Security benefits that they are due. Now, they're not going to go back and pay you everything you were due if you've been on Social Security for years and years, but this is retroactive to the end of 2023, which means you will be paid back your benefits for 2024.
And that could be a nice little windfall.
It is a nice little windfall of money that they earned and they were probably owed. So again, I'm in the camp, if you can't tell, that it is not an entitlement. We're paying an awful lot of money into this, and this is our retirement, and everybody should get it that paid into it. So ultimately, if you're affected, the key is, what do you do now? How do you get it? Well, this is in flux. So if you go to socialsecurity.gov, what they're telling you is if you're already getting Social Security, but it's reduced, you're going to automatically get the increase and get paid back. So you really don't have to do anything. But if you are not getting Social Security because you did not qualify because of this provision, you need to go to the Social Security website and apply. And then you will start getting your benefits, and it looks like you'll get your back pay for last year also. So that is ssa.gov/apply. And that's how you will apply. It's very easy to find when you go to the Social Security website, and you can log in and check your benefits and create your own account very easily and see exactly what you should be getting on a regular basis.
Is there a deadline involved here, Terry? A deadline that people have to meet?
Well, if you need to apply, you want to apply right away. So there's not a lot of clarity around that necessarily. Because you can apply for Social Security at any time, but once you reach your maximum age, you're not getting any more benefit. So let's say your maximum age was 70 years and 3 months. Well, once you turn 70 years and 4 months, your benefits aren't growing, but up until that time, they're growing by 8% a year. So they're in optimization strategies. There's a lot of things we do in order to decide just when should we take it based on ages of the husband and wife, life expectancies, other income resources, and things of that nature. So that all goes into optimization, which is very important to do. So I would recommend you apply right away if you're at the point where your optimization says to apply. This doesn't change things. If your plan said, I shouldn't take it till age 70, then still wait till age 70. But now your benefits are going to be much bigger because everything will be in place and fixed, and you won't even hear about the windfall provisions. So if you're not sure if you should be getting these windfall provisions because you haven't applied yet, ignorance is bliss, meaning the rules have changed. You don't even have to deal with these rules because you're automatically going to get more under the new rules. It's just people that are already getting it or should be getting it but haven't applied because they weren't eligible. So if you're already getting it, do nothing. It will be fixed as long as your address and everything, your records at Social Security are correct. But if you need to apply to get those benefits, those are the people that have to take action, and they need to go to the Social Security website and apply. And they should do that right away if they're already on Social Security, or they're already on their pension, but they should also be getting Social Security.
All right. Very, very good.
Yeah. And let me correct that a second, Patrice. If they're not getting anything, they should run their optimization first. Because if you're not at maximum retirement age, so let's say you're 75, you're beyond maximum retirement age, you should apply immediately. But let's say you're 65, you should run optimization, see if you should take it now or if you should wait till you're 70, and then you decide when to take it. So we have a tool for Social Security optimization. You can go to our website at www.weriaadvisors.com. And there's in the upper part of the website, there's a link and you can do a Social Security analysis, and that can give you some insight if that's something you have not done to optimize your Social Security.
All right, fantastic. Anything else about this that somebody really needs to know, or should they call you and get the details there?
Yeah, I think the podcast is good. We've got an article that's about to come out that will probably maybe even link to this once it comes out. I think if you want to talk about it or do more detailed planning, definitely reach out to us. There are links on our website, as well as you can just call us. Our local number is 916-325-0130. We have clients, I want to say 12, 13 states now. So if you're not in our immediate area with technology and Zoom, we've got clients all over. So we're happy to help.
Fantastic. All right, if you have questions about Social Security and the new Fairness Act, by all means, contact Terry. And follow Terry's podcast to know when a new show's ready for you. Of course, don't forget to share it with others as well. I'm Patrice Sikora, and thanks for being with us.
Thank you for listening to We Money Talk with Terry Wheeler. Be sure to click the follow button to be notified as new episodes become available. Information presented is for educational purposes only. No listener should assume that any discussions or information presented serves as the receipt of or substitute for personalized advice from We Alliance Wealth Advisors, Inc. or from any other investment professional, and is not intended as an offer of solicitation for the sale or purchase of any specific securities, investments, or investment strategies. We Alliance Wealth Advisors, Inc. is not a law firm or accounting firm, and no portion of this podcast should be interpreted as legal, accounting, or tax advice. Information expressed does not take into account your specific situation or objectives and is not appropriate for every individual. Listeners are encouraged to seek advice from qualified tax, legal, or investment advisors to determine whether any information presented may be suitable for their specific situation.